Welcome to Growth and Exit Strategies for Software and IT Companies, the flagship tech conference of the World Financial Symposiums. The GXS conference caters to tech founders and investors in tech M&A, covering topics like investments, growth strategies, buyouts, sales, divestitures, and mergers. Thank you for joining us. Let's begin.
Now onto our last panel of the day, the Sellers Panel. Here we're going to hear from CEOs who have built and sold their own software companies, led by Jaber Tannay, Senior Vice President at Corum Group. Jaber, take it away.
Thank you very much, Jeff, and thank you to our audience. My name is Jaber Tannay. I'm a deal maker with Corum. I joined Corum about 7 years ago, and I had the pleasure to lead and close several deals. One of the few you see the CEOs of them today. And before Corum, I was CEO of an IT services firm that I bought, run, led, and optimized and sold. I was also an investment banker working for an investment bank called ABN AMRO. So it's my pleasure to be here with you today. I'll hand it to Michael for the introduction. Everyone will do the introduction, and then we'll dive into the subject of this panel. Michael?
Thank you. Michael Wilson. I'm the founder and former CEO of Healthcare Information Management, and sold the company with Corum's help in April of last year. I started the company about 25 years ago. I've been in healthcare, health plan, payer operations for 40 plus years. And so glad to be here and join this panel.
Thank you very much, Michael. Roy, maybe you can do your introduction.
Yeah. Hi, everybody. My name is Roy Eisenkot. My background is in biomedical engineering, but I've been in the technology transfer space since 2008. Just to say a few words about what technology transfer is, the traditional paradigm in the higher education or research space is publish or perish. That's still the case, but there are other ways to create impact, and that's through commercialization. I'm an associate director for bioengineering at the University of Washington in Seattle, where I oversee a portfolio of innovations in the bioengineering space. The research budget of the university goes into, obviously, research at the university, but then that kind of fuels our pipeline of innovations. So that's about $1.5 to $2 billion a year in R&D funds. I have 20 to 30 active projects at any given time. And the way we commercialize work is we license technologies to incumbent market players, startups, SMEs, Fortune 500 companies routinely. We start our own startups, and then we also have a third avenue to commercialize, which is smaller than the other ones, but it's the one we're going to talk about today, is direct to consumer, or providing direct services from within the university and not through another entity. And that business is the DIDB, Drug Interactions Database. And I guess here in this panel, I will kind of represent the nonprofit sector in that sense. It's a subscription service. And I can expand on this now, or we can talk about that more later.
Excellent. Thank you very much, Roy. I think we're now in the US. We now have to move to the northern part of Europe. And since you worked on both sides of the Atlantic, Andrejs, maybe you can start your introduction.
Thank you. Hello, everyone. I'm Andrejs Strods. I'm founder and CEO of Bluebridge Technologies. That's the IT company in the space of healthcare. Our main product is hospital information system, also catering as well and producing the product for the smaller practices and clinics. We also have the patient portal for online appointment booking for the patients, and the health insurance clearinghouse. So the business operates in Latvia. And as Jaber has mentioned, so we also had an experience of launching a spin-off in the space of transaction processing for self-funded health insurance in the United States. That was a kind of a shorter episode when we launched the company separately. Before this, I've done some IT businesses previously, and I had two sort of reasonable size exits to strategic buyers around 2001, 2003. So that's my previous experience. And well, since then, from the 2007 up until 2022, so we owned and ran this company, which was backed by venture capital. So the transaction happened almost 2.5 years ago. Thank you.
Time flies, Andrejs. I had the impression it was yesterday.
Oh, that's true. Yeah, it went very quick.
Thank you very much, Andrejs. And now the ultimate northern part of Europe, Karsten.
Hi everyone. Thank you, Jaber. I'm Karsten Teige. I'm the CEO of Holberg EEG, a company that operates within the EEG market. The company is a spin-off company of Haukeland University Hospital. We actually went through TTO back in 2015 and were commercialized that way. When the company was founded by a clinical neurophysiologist named Harald Eolén back in 2009, he saw that when he was doing research, he discovered that there were so many different terms and languages depending on what hospitals EEG studies were made at. So he sat down with a group and created a standard for structuring the EEG reporting. And then we launched a software tool to go along with this standard, and it was spread throughout Scandinavia, and from 2010-11 and up to 2020 approximately, this software was used to create more than 50,000 highly annotated EEG files, making this the largest database of structured EEGs in the world. We have raised a lot of funds going through the life cycle of the company, and back in 2020, just before COVID hit, we got Natus Medical, the largest player in the EEG industry, on board, and that also propelled the AI development of the of Holberg, and using those highly annotated EEG files to apply EEG machine learning on them. And in 2024, we had our first product approved by the FDA.
That sounds very good. Thank you very much, Karsten. I would like to start with the subject, and please feel free to suggest other subjects if you want to, but I would like to start with the preparation. And I'm thinking not necessarily preparation as a project, but preparation from the CEO point of view, or the decision maker that you are. How did you prepare yourself to go into an M&A deal? Actually, you had to. Some of you might have triggered the deal. Some of you might have been asked to trigger the deal by investors. I'm thinking of Andrejs, for example. I think, and as far as I remember, the decision to go to market was made by your shareholder. But please correct me if I'm wrong, actually. Maybe I can start with yourself, Andrejs.
Yes, of course.
How did you prepare? How can you give some feedback to someone who's now sitting in the same chair as you were like 2.5 years ago, and has to start preparing himself or herself to go to market?
Well, we had much more time to prepare ourselves, or to get used to the idea, because, well, as I mentioned, we had venture capital backing us, and, well, the format and the mandate of venture capital is to invest for a certain period of time. So it means that basically the moment we sign the agreement for taking VC investment, we already decide that one day we will sell the company. or we will be forced to do that, even if we probably don't like it. The only alternative is to buy it and buy it at the market price. And that's basically, there is no third option in this case. So for us, we were with the VC, we were for, I think, more than 10 years. And the 10 years is really the fund duration. And that was out of the question of staying longer. So the VCs have to exit, and they did.
Excellent. Thank you very much, Andrejs. Maybe we can switch the point of view for the preparation, because Roy, you have entities that you manage directly. So you are the one who pushes the trigger, start preparing. And maybe you can give us your different perspective. So you're acting in a certain way as a CEO, but also as an investor or a shareholder.
Yeah, happy to share. So let me just say a few words about the business. So the DIDB, the Drug Interactions Database, is a drug interactions database, as the name suggests. It's a subscription service. We had over 200 paying customers, pharma companies, contract research organizations. We had about 15 or perhaps even more of the top global pharma companies as customers. It was a very high customer satisfaction service and had impeccable reputation. And I want to talk about a little bit about what drove us or motivated us to sell or to seek a sale of this service, because it's been ongoing for 20 years. It was housed in our Department of Pharmaceutics. It was making money. It was self-supporting and more, so everybody's happy. But there was a growing sense that there is a lack of strategic alignment with where the university wanted to go. So they were housed at the Department of Pharmaceutics, and they were obviously involved in research and teaching, and the DIDB was self-sustaining. But I think that the department started to feel that it is still a distraction because it's not directly related to the core of mission of what they're doing. And if I want to compare that to the for-profit world, I can think of a business which is doing well, but is otherwise not super aligned with where the main business is going. So you want to divest of it, you want to monetize it, and you can do that. And so that was one of the reasons we wanted to do that. Another one is we wanted to allow growth. We felt that the DIDB has outgrown its, place in the university in a sense. It was limited by the university in various ways. The university is super risk averse. And because of that, there were things that in our subscription contracts we had to have, and not all customers like that. And so, there was some friction around those terms. Or without getting into too many details, there are certain geographies where the DIDB could not operate as freely as they wanted. Those are high growth areas. And we were kind of holding the DIDB back. And there was also the question of timing. And, obviously the word AI has to be used because it's the buzzword these days. But honestly, AI, I think, was sneaking on us in a sense. And the DIDB is always, in a sense, a few months away from outdatedness because you have to keep it updated. And we had a team of really top-notch scientists in charge of that. And I don't think that they would be made redundant, not at all. It's just that with today's AI's tools capabilities, I think that you can do more, perhaps with less people. So I think that the barriers to competition may be lower. Perhaps the moat is less deep, if you want to think about it that way. So the timing was right in that sense as well.
So thank you very much, Roy, actually. We will come back to the timing because I think there's different angles to it. Maybe Michael can give his perspective of how did you prepare to start to sell your firm? And maybe even before you invited an advisor, in this case, Corum, to help you.
Sure, certainly. Let me quickly, I didn't talk about our business model in my introduction. So Healthcare Information Management, HCIM, is a healthcare software and consulting company. Our clients are small to mid-sized health plans, managed care payers, Medicare Advantage plans, TPAs, MSOs, and such. And so our flagship product was based on our technology was SimKey. It's intelligent robotic processing automation. We've had it in the market almost 23 years. We were doing it long before AI was around, screen scraping, macros. We had developed our own technology and very efficient. And I was the original architect of that. Came from my operations background in health plans and payers, and really worked to come up with that. So that's kind of about the business. So we're in a different situation than some of the other panel members here. We bootstrapped our company in July of 2000. There was originally 5 founders in that company. We kind of outgrew the other 3, and so there was just 2 of us. And really it was, we never had outside investment, equity investors, anything. It was a bootstrap. It was always going to be our retirement. We knew at some time we would sell the company. So I started looking probably about 4 to 5 years ago, trying to get educated. And that's where I really got started. I attended a couple of the Corum executive summits to really learn about it. Wasn't really interested in selling at the time, but I wanted to know about what the process was. One of the things that I would say came to me during that was I always felt, well, I'm not ready to sell. And if I grow my company more, it'll be greater value and, the purchase price will be better. I learned that's not necessarily the case. It's also about the markets. Is it a buyer's market? Is it a seller's market? And so even though I grow, if that shifts from a seller's market to a buyer's, it doesn't matter about what that other growth is. So that really, we started first originally, then kind of going, well, okay, we might take a minority purchase and still keep control. And then it just really kind of decided, no, we wanted to be open to that. And so really what I would say is what really drove me is I always told our folks, I didn't want to die at my desk. Okay. I didn't want that written on my tombstone. Well, you worked really hard. Okay. So, for me personally, I turned 70 last year. So that was coming up. I did not have an internal successor who could really had the financial backing and money to be able to make sure that the company did well. We bootstrapped. We never took any money out and built it up. And so just becoming very educated about what the process is. And like I said, enjoyed what I did. Still have passion and fire in my belly. It's just the stamina to be able to put in 50, 60 hours a week. I just don't have that. But we went through 3 separate LOAs. And that was a learning experience, as we go through and went better. We finally, on the 3rd one, felt like I got the right match.
Thank you very much. Thank you, Michael. Karsten, you touched upon a little bit of the preparation, but maybe you have something to add to it. Actually, how did you prepare? I remember it was very short. In your case, we spoke in June, and we signed in late October, actually, with the buyer. But yeah. Probably before that was the interesting part. And I know you did a lot of work, actually, to prepare for the product, by the way.
Yeah, we did. At the time of the acquisition or going into the process, I was the CFO of the company, doing kind of all the boring preparation that's needed for due diligence and all whatnot that comes into these processes. And the benefit of have done a lot of financing rounds is that the process, or the aim at least, is quite similar. Investors are looking for the same thing, whether it's an equity raise or if it's convertible loans or if it's acquisition of the companies. We were quite used to this being in a situation where people are digging and looking into the operations of the companies. We knew quite well what people were looking for. But one thing that we learned, or that is one of the lessons we have, is that coming from Norway, quite a small company, heavily based on oil, and being from the west coast of Norway, where all the oil industry are, it's hard to attract money to med tech or technology in general, unless it's something that you put into the pipelines of oil. So we would have gone internationally looking for investors earlier if I could do this one more time. So that was the decision we made at the time. We had also a venture capital, a fund that was going towards the end of its cycle. So we knew that there was a sale of at least their shares in the company. So the decisions were made in, I think it was actually April, May, and we signed with a buyer in, I think it was into November, actually.
Actually, very early November.
Yeah,
Very
I think
early
so.
November.
So, but if you want to be more practical around this, I would say that it's very, it eases the process of selling a company if you do a proper house cleaning before you're entering into any sort of arrangement with advisors. Because you have to do it one more time, and all advisors has their own way of doing it. They're asking for the same thing, but in a different way. But if you have, this is mostly the board's job, in my opinion, to ensure that there's a proper house cleaning before you start the process, or else the process will get very muddy, and there will be put a lot of stress on your administration. So it's better to use the last year or last 6 months before you are entering into a selling process, is to ensure that you don't have any loose threads or skeletons in the closet that you know that someone will find anyway. Then you need to take it up and fix them, or because you can't bury them deep enough, they will come up anyway. So prepare properly. So you have done 80% of the due diligence before you enter into any sort of arrangement with advisors, and then when you go through the list with them, it's a much easier job, and it will only be the last 20%. So that's my advice on a more practical ground.
Thank you very much. Thank you very much, Karsten. And by the way, you guys in EEG, Holberg EEG, was a unique product worldwide. It was the same situation as for the ITP, actually. You were the only one, and there was no other product on par in terms of quality, actually. And the ITP was, Roy was presenting it as a very simple product, but actually it was the standard, the de facto standard of the market in terms of drug interaction, actually. So it's very interesting for me to hear that timing was also chosen by both parties, actually. But in the case of Roy, to avoid getting in sort of cashed up by the competition, actually. So obsolete, that's the word you mentioned. But in a certain way, you had a very strong lead anyway. So you probably decided on terms of timing way before you would have had to do it. You could have waited for a few more years, actually. That's my perception looking out from outside.
Yeah, and for our part, sorry.
Go ahead.
Yeah, now for our part, it was also, we are getting really, really close to the FDA approval, which is a huge milestone for a company like ours. And we knew then that if we start now, then we will be there, or with 95% certainty before we closes the deal, that there will be via FDA approval, and that of course lifts the value of the company. So it kind of was more than one thing that added up to that. That was the right timing for us.
And Roy, you wanted to add something?
That's good.
No, wrong. Oh, good. In the case of Andrejs, you were the leader of the market actually. In the as a patient portal in Latvia, you're the market leader as well as the clinics connection system actually.
Yeah, that is probably a beauty of the small markets, that you can actually be if not dominating, but definitely in a leading position, and you might have really significant market share in these markets. And in fact, it is the only way to survive for a smaller market. You have to have sufficient market share and sufficient number of customers to make a viable business. And that is definitely what was one of the key arguments for the buyer to talk with us and to transact with us, because of the position on the market. It is not like rocket science of what we produce. It's more like daily bread and butter that it needs to feed the industry and to run the industry. But that has solid presence in the local market and large number of customers and a big share of the market, and therefore I believe that this, and combined with the product itself and the business model of SaaS and being in B2B, having big presence in the market. So these were crucial arguments.
Thank you very much, Andrejs. Michael, it seems like you are the only one here among the 4 CEOs that has internal reasons to decide on timing. You decided for your own personal reasons, whereas Karsten, Andrejs, and Roy, they all had a corporate behind them with constraints and shareholders, and Roy had this concern about AI catching up with the system, so it was more external. Anything else to add? I understand you didn't want to die in on your desk, as you mentioned.
Yeah. Both my other co-founder, who we've been together for 25 years, he's a couple years younger. And it was really about to be able to continue the legacy of the company that we built. We had a great culture within the company, well respected with our clients, contacts and affiliates that we had. And I wanted to ensure that continued. I knew that, I was a critical cornerstone of that, and I wanted to be able to have that continue. So I really built over a couple of years preparing for it. Karsten talked about preparing, setting up so that I formed the senior leadership team and letting them run the company more, and making decisions, but keeping me informed. For the first probably 22 years, I was involved in everything, and I knew I needed to get out of that, and so that it would continue. And that the company continuing was really about the legacy. And so then looking at the timing, and I knew that if something happened to me before, that legacy would be in danger. And so that was a big part of making sure that, HCIM and the company and everything we built went for another 25 years. And so, looking at that, I am kind of different than the rest. Is, I didn't have that outside pressure, growth, but also knowing the marketplace and, not wanting to wait until it flipped from a seller's to a buyer's market was important. And I knew that timing was getting close for us. And so to try to get the best enterprise value that we could. Karsten's right about being prepared before. I've always wanted to run this company. I set it up years ago, running it. We were a $5 million company, but I ran it like a $50 million. We had our processes in place, policies, everything down. We were a California C Corp. We had all of our documentation. So there was no skeletons. And so, we weren't just a regular mom and pop store. I've heard the horror stories from other people. Had our, act together. We were solid. We're a well-run company, and I knew that. And I also knew that by having that helped increase our enterprise value.
Thank you. Thank you very much, Michael. I reduced the image when I said you did it for your own reasons. It was also for the benefit of the firm. So you were concerned of the firm surviving and developing, thriving after you had handed it to someone else. So thank you very much, actually.
And Jaber, I'm sorry for thinking slow, but I want to add the comment to the preparation part, because I just thought of the element. And even though I fully agree with everything that was said about, basically swiping the floor before they having guests in the house, that's clear, and this is what we had to do as well. But there was one thing which was important in our case, that we have thought about what kind of buyer we want to deal with. Because we understood that in our positions, myself and my co-founder, we will have to live with a buyer for a while. And that's a different story. Okay, VCs, they just sell and exit and that's it. But, we're going to live there. And we had to formulate of what kind of buyer we want and perhaps what kind of buyer we don't want. And we had a very good example of, because we had initial occasion when another buyer made the bid for our company, and we were doing all the preparation, etc., and this deal didn't go through. But we had this very good example, and we saw of what we cannot live with. And that buyer, for example, they would kind of make us an IT department of their bigger corporation. And this is definitely, not fun. At least we consider it's not fun for us. And we had this chance and a very good example to stimulate us formulating of what is the buyer that we look for, what amount of freedom we want to have, what amount of support and corporate background we want to have. And that was very helpful, actually. So once we had the buyer that met the pattern, that was very easy for us. We could easily imagine what we are looking for. Of course, there are surprises afterwards, but still, that's a helpful exercise to know what you're looking for.
Excellent. Thank you very much, Andrejs. Actually, you're quite close. Your comment, I see them very parallel to those of Karsten, because it's about cleaning the house and cleaning one's mind exactly on what's the targets that you're looking for. Maybe we can have a couple of words on how did you go through the process of selling? Now we're starting from when you already had assigned an advisor, in this case Corum, and you've been through the process. Maybe you can share a couple of words on what you would do the same and what you would do differently afterwards with hindsight. Maybe, I don't know, Karsten, maybe you can start.
Yeah, no, it's for us the initial process was quite okay, but you also, as I mentioned earlier, we had quite a quick process. And maybe it was in the beginning, at least it felt quite heavy when all of a sudden you have to start preparing for the first initial meetings. And it happened. We had multiple meetings every week for several weeks. And once you've done it once or twice, it's okay. But in the beginning, it feels kind of overwhelming. Going through that phase, I think that was one of the harder part of the selling process, is to, when you get over the first contact with people, is to actually kind of understand if there's a real interest or it's just people who is testing the market. So we don't spend a lot of time on answering questions and spending a lot of time creating documentation for people who is not that interested. They're just kind of searching around to see what's out there, but there's no real interest. So that can take a large amount of time for the organization. So kind of quite early, try to reveal who is actually really interesting and want to get into an LOI. And we, after summer, we managed to kind of to crystallize who had real interest. But I felt, our organization felt that was the hardest part of the process, actually, not wasting time on people who was just there to obtain information and not had a real interest.
And that was crucial because you had a small team and very heavily loaded with work team. So that was even more true in your case, actually. I agree. Roy, maybe?
Yeah. So one of the first things that we knew we had to do is get to work with an M&A advisor to help us, because we do transactions routinely. That's what we do. We license stuff. We do licenses and we do equity-related agreements, but we don't do M&As on a routine basis. And so we reached out to folks in our network and asked them for recommendations. That's how we got to Corum. And when we started engaging with Corum, we realized that, that is super valuable for us. So that was the first step. And then since this is a pretty big organization, the University of Washington, there's so many different stakeholders. I needed to make sure that every stakeholder, from the chair of the department where the business was located, to our attorney general, to our accounting people, to our marketing people, that everybody is aligned that we're doing this, and that everybody's aligned on the reason that we're doing this. And this is kind of related to what Andrejs said earlier. You have to know your why, and you have to have everybody aligned and agreeing on that. Because at some point we got an offer, which was not a bad offer, and financially, and we could have taken it. But then we went back to the reasons which we set up in the beginning of why we want to do this. And one of them was, we recognize that we're limiting the growth of the DIDB, and the university is not just about money. I know it sounds a little perhaps idyllic, but it's not just about that. It's about the impact, and it's about the career opportunities of the scientists that have been working in this space at the university for 20 plus years, and selling to that buyer would have meant that their career options would have been limited, and the DIDB would not probably exhaust its potential. And so we kind of bought time and eventually decided against it, even though we did not have another offer at the time. We kept looking.
Thank you very much. Michael, maybe comment on the process?
I got a little different perspective on this and why I chose Corum. I had looked at another M&A broker before, but I just didn't feel like they had the depth of experience in the technology. And so that's one reason why I chose Corum. But another that really, for me personally, was this was my legacy. I had a lot of emotion. This was my baby, our flagship product. I was the first architect and how we've grown. And so, for me, there was a lot of emotion in there. And, I had a great deal maker from Corum, and he did a lot of that negotiation. And, where the hard negotiations, I didn't have to do that, because it was always a balance between my emotion. This is what I built. This is my legacy. Okay. Versus, looking at it from the numbers and being able to go through that. And so that was a great benefit to me, and actually to my other co-founder partner in this is, could keep that emotion down. Like I said, we went through 3 of them, different varieties. The second one was really a technology consolidator. But I made it really clear, that I wasn't long-term in this and didn't want to continue to run the company as a couple of the other panel members. I don't have any regrets. I don't believe you can have regrets, is, but I will, the thing is, I will say is, looking back at it, people will say anything, okay, to get the deal, okay? On the other side, on the buyers, I'm sure some of the others have seen that, and they'll tell you anything and whatever to get it. And try to vet that, the best you can. I felt like we, did our best in trying to vet it, but in the reality, that happens. And so it's their company. I'm, paid for it. And so I understand that. But still, it's some of that going back. And, part of our culture was about our values, respect, integrity, and trust. And that's really what we built. And I knew that was going to be different because that had really started with me. Those are some of my personal core values, and it's what we built around the companies. I had no aspirations that the new buyer and owner operator was going to be just like me. Okay. So looking back, and what I would say is I did the best I could in trying to find a place for our company and that continuing legacy. Knew it was going to be different. You just don't realize sometimes, as a founder in the company, understanding you'll never recognize or understand just, how different that can be.
Thank you very much, Michael. So not only Roy doesn't care about money, but you don't care about money either, actually. The motivations are different.
It wasn't, that was part of it. This was my retirement and being able to do it. And, but it was more than just money. The second one that we looked at as we go through, we said it's not values, you have to be careful who that, when you get in the dance with. But it was about the legacy. It's what we built, and we wanted to be compensated for what we had built. But again, it was to ensure that it had ongoing for our colleagues, for our customers, and really the reputation.
Thank you very much, Michael. Andrejs, do you have a couple of words on the process?
Yes, well, it's not on such fundamental scale as Michael's, but, well, my observation is more like really on the process. And I'd say, well, in hindsight, what I would have done differently is probably being somewhat more involved in the process of negotiations, and in particular in the legal negotiations. Because that was clearly the moment, and we had these several points in the whole process and working on the transaction, on the deal, that I thought, well, to hell with that. So that's not going to happen, and I don't care. And that was exactly when we let it loose between the legal consultants from the both sides. Because yes, we had the legal team on the seller's side, but guess what? The buyer also had the legal team. And these teams, they can play the tennis and you just watch it, yeah? And they can do it forever. Because that's basically, they cannot agree, or, well, they can only disagree. And that continue endlessly. And, well, the only people or the only players who can make the decisions are us. Yeah, well, either on one side or another, or, well, actually on the both sides. And that only worked when we got together and said, all right, well, so here's the position, here's the contradiction, so what do we decide? And then we shake the hands on what we decide. And that's the only way that works. And we could have definitely done it sooner, and we should have. And so, well...
If I may comment.
I'll have people call you, actually, Andrejs, because it's always the case at the end when it drags around negotiations and the lawyers are adding to the complexity so that they benefit a little bit more. And I'll have people asking advice from you when we reach that point, actually.
Yeah, I can say it again and again.
Yeah, Roy, you had a comment, actually.
Yeah, I 100% agree with Andrejs. So in my case, I was the person I was kind of championing the deal inside the university, which is otherwise, as I said, pretty large with a ton of stakeholders. And at some point when we were negotiating with our ultimate buyer, towards the end, I felt like it was time to paint or get off the ladder. And I felt that if we don't do that, then it was just slipping away. So I had to just, make some tough decisions and get all the stakeholders to listen and make those decisions. They can't wait anymore. They can't delay anymore with respect to various deal terms that were kind of sticking or making everything not move as smoothly as we expected. And then we just did it. So I think that's really, really important.
Excellent. We still have a small 10 minutes actually to go for the after the deal. And I think we have a very, very diversified panel here because some of you are still working in the entities, some of you have left, and some of you are detached enough. I'm thinking of Roy actually, whereas some, like Michael, have a very deep connection. I'm not saying that the others don't have the deep connection actually, by the way, but you've spoken more about it. I remember actually about 12 years ago, I sold my firm and I had worked for every single day for more than 6 years. Now, I was doing many things, actually. It was a small firm, very much involved in it. And then I remember this day where I get out of a meeting with the wire done and the deal closed. And I had cash had closed, no earnout, nothing else to do. It was a very deep feeling, actually, of freedom. That's what the word I remember for me. The next day, I was like a free man. I can go and do something else. And there was a lot of good feelings about it. So I would like to hear a couple of words from you about the day after. I understand that some of you don't yet have that day after 100%. and that's your case, Karsten, actually.
Yeah, that's correct. That was why I was smiling. No, we ended up with our largest shareholder, which is Natus, the industrial investor. We already had to buy the whole company, but we are still in the buyout period. We are delivering on certain milestones that will trigger the last part of it. So for us, it's been a small change. We are still working towards the same goals. We are more or less the same team, and we are working with the same the same areas as we always done.
But you're still the day before in your case.
Yeah, the day before, the month, or the whatever you call it. It's but the difference is that earlier we had to prepare for the next equity raise, prepare for that for 12 to 24 months. So that's kind of a task that's disappeared with one large owner, and it frees up the organization to get a lot of productive things done instead of pleasing shareholders. So that's the good side of it.
Excellent. Andrejs, you're still working in the same organization as a CEO. And you should be at the end of the earnout or post earnout. So does it feel different? Because now you're not a shareholder anymore. You're the CEO.
Right. Well, but as I mentioned, we had venture capital on board for quite a while. So you can imagine that the governance is sort of close to what it is when you have just external shareholder. It is very different. I've seen other companies in the portfolio of our buyer who really transitioned from being the kings in their kingdom to now being just one of the, bureaucrats, in the bigger organization. And for them, it feels shocking. Yeah, for me, even if I thought of myself as a king, I've been always a king in the parliamentary monarchy. So with no real power, but then still the parliament deciding what I have to do. And in that sense, it didn't change much. Yeah. But the important thing is that, and this is what we built it into the business in the very beginning, because we wanted to do the business in the field of healthcare, and that didn't change. So I just still love it and I like it. After all these years, I still enjoy doing these things. And in that sense, the fundamentals are there. So I'm enjoying doing things that I believe are useful, needed, and that are sometimes fun, sometimes less so, but they're all right. So we believe that we do important things, and that continues. And so far, life is good after, the day after, or a year after, or 2 years after. There are changes of course, in some things. What I don't like very much, but I'm taking it more like a new experience and living in the rapidly growing corporation with all the corporate bells and whistles that I didn't have much of experience before. Not all of it is enjoyable, but that's a new experience again. So in that sense, I can say it's a fun. Yeah. So, well, thankfully, we have pretty good understanding with the new shareholders. So in that sense, I can't complain. Mutual respect is what is always working.
Very happy to hear that, Andrejs. Thank you very much. Thank you. Roy, I assume for you is business as usual?
Well, the DIDB did take a significant portion of my time. And so once you close the deal, it's like I almost felt like I married off my son or my daughter, which is like you're saying goodbye in a sense, but you're also happy for them, right? And I'm willing them on, and I'm, monitoring how they're doing. And but at some point, and everybody's talking about it for the first maybe week, and then it dies off, and you just move on to the next thing. I want to comment about, if I may, about the process, because there's another point that I wanted to make. I'm forgetting what it was about the process. I'll think about this again. I'll raise this point. Yeah, just
we'll do that in the next panel. Next panel, you'll come back to that idea. But if the idea doesn't come back in the next 60 seconds, we'll do that in the next panel. Thank you very much, Roy. Maybe your last word. The last word is for you, Michael. Unless Roy remembers what he wanted to say.
Sure. And again, I'm in a different situation than the others. I did have an earnout. I stayed on for 9 months, Roy, and to be the role as an advisor, a coach, a mentor. That worked for a couple months, and then really, it's their company and how they wanted to take it. And so, I was probably, hindsight, a little, too long trying to hang on. And it was, at times a little difficult watching from the outside because, like Andrejs had talked, was, decision maker, shareholder, the CEO, the leader, and not having that opportunity. And so, but life is good afterwards. The fruits of, of our hard work and what we've done. Bought a condo on the beach in Florida, overlooking there, trying to spend some time. But I've always been a servant leader, always believed in paying it forward. And so we've also been blessed to be able to start a charitable foundation for rescue animals, or big for my wife and I, as well as disadvantaged youth. And so getting involved in that, I'm very honored and humbled that I have a very good, well-respected in the industry. I've already been sought out by another company to join their board. They, my experience and knowledge, it's well sought out. And so I want to continue on some of that and kind of, be that mentor, the coach, to help bring the next entrepreneurs up at companies. And so I want to do that. And so I'm looking forward to that and excited about that. And life is good.
Thank you very much. Thank you very, very much, Michael. And thank you very much to all of you. Thank you, Roy, Andrejs, Karsten, and thank you to our audience, actually. And now I can hand it back to Anna